Okay. All right. Welcome back. Welcome to the Traders and PJs family. Today, I'm really excited. I know the title is a little clickbaity, but I promise this video is not clickbait. I will be talking about how I made really over $4,000 this week through intuitive investing, and I'll talk a little bit about what that is and how you can do this going in the future as well. So, like as always.
All right.
Welcome back. Okay, mute this. Okay, feel free to ask questions anytime during the lesson. Keeping in mind the GFAST mentality, the chat is safe, so I'll read your questions when I get a chance. Now, the knowledge required for this video, I think I'm going to start having this slide at the beginning of every lesson and the beginning of every 1 million Trading Goal Challenge. Notice I changed the title, and the reason I did that is because I'm changing it to $1 million trading goal challenge instead of the $100 trading challenge, because I'm going to now show the results from both my main account as well as my $100 trading account, because I think you guys have know enough now, right? So the reason I didn't want to at the beginning is because I didn't think it would be helpful to you guys because I would tell you guys something, but you guys would have no idea. Yo, Randy, what's up, dude? Thank you for waiting and thank you for coming on. You guys would have no idea what I'm talking about because I hadn't released the videos lesson 1 to 5 yet. And funny enough, some of the things I want to talk about, you still won't understand because we need to wait till lesson 7 where I talk about multi-leg option strategies before you can understand everything I do. And that's going to be created next Saturday. That's okay if you haven't watched the lessons, but you probably won't understand everything I talk about in this video then. So you can watch the videos and come back to this video in the future. I'm going to go faster now so that we can start talking about actual trades rather than just how trading works. Much more fun to apply what you learn and see the results rather than just learning how trading works, right? So you might have noticed this week that I am no longer making daily watch lists. And that is because what I noticed from the watch list that I did create was, yes, I kept track of all the companies that I showed you guys, and funny enough, most of the time I found other opportunities to trade rather than the 10 to 12 companies that I mentioned in my daily watch list. So instead of doing that, I just think it's more helpful if you guys go watch Trading Fraternity's daily videos. He makes suggested plays every day. He makes videos Sunday through Thursday, every day before the trading days. So go watch them. They're fantastic. I don't use all of his ideas, but they're great ideas to at least draw from. And then also go watch Zip Trader's watch list videos. I really like the way he talks about trading, how everything he believes is an overreaction, and I tend to agree with that. He does sell a course though. Don't pay for his course. Just save the $400 and learn how to trade and make your own mistakes and invest that $400 yourself instead of paying for a course. It's just, in my opinion, the money that you could, the lessons you can learn from just investing the money you would buy a course with is way more valuable than buying any course. And I'm making videos now, so you guys can just use my videos. They're free and to learn how to trade. And I would join his Discord. It's free, and that's actually where I got a few of my trade ideas today, this week from. Well, my brother really got them, which is crazy. Austin is my younger brother. He's pretty much become a better trader than me. I feel like he's learned so fast. But you'll see that actually the two big plays that got me most of my money this week were from Austin noticing movement in those stocks, and I'll talk about them later. Check out the top movers and top winners and losers every day on ThinkorSwim. I'll show you this really quick. And this is for the overreaction strategy, right? And stocks tend to overreact, and so you can easily just look at the top losers, percentage change losers, and percentage change gainers here. And this is a default watch list that ThinkorSwim gives you. So go use that. It's pretty useful. All right, so before I go into the big plays where I made most of the money, I'm going to talk about the $100 trading challenge first, a little bit of philosophy and lessons I learned this week, and then we'll dive into the meat of this video, which is how I made the $4,000 that I'm sure everyone wants to know how. So this week, wow, no watch list. Yeah, sorry, dude, but these three sources are really, really good in terms of finding new ideas to trade. So let's talk about this week, and I'm going to go through them very quickly. As you can tell, it wasn't a great week, and it's just because beta. I talked about this a little bit in the long-term investing video, but all stocks have a certain degree where they tie to the general market, right? And I use SPY as a general market indicator, and most people and most companies do. And so The stock market dropped a ton this week because of the China trade war news that has been coming out, and as with all the tweets that Trump has been making. So it's been hard to make profit this week on the small account, which is fine. Like I said, it's all about risk management, and the winners should overshadow the losers as long as you continue to make sure that like I said, making sure you have really good risk management. I used all overreaction plays this week, 4 of them, and then one of them was from my brother's scan that he created. But I want to test his scan and make sure it's really good before I suggest it to you guys and give you guys kind of like how to create this watch list scan in your own ThinkorSwim. So let's go through really quickly the 5 trades I made this week. Notice that I switching to these overreaction swing trading strategies. I only used 1 day trade this week, and then the day trade was only forced because the stock market took a huge dive that day because of some news, and so I really could have not used any day trades almost. So that's way better. That means I can trade a lot more and more often, and that's always great, right? Because you don't want to overtrade, but at least you want to have the opportunity to jump into opportunities if you find them. So the first one is Resi and VSTO. Funny enough, I actually did talk about these. These are Zip Trader overreaction recommendations. I sort of didn't follow his rule, which is wait for signs of recovery before you jump in. I just kind of wanted to try the overreaction strategy, and so I jumped in Monday at like you can see 9:30 and 9:33. So like literally minutes after the market opened. Don't do this. Wait a few minutes. I could have gotten actually better entries and probably wouldn't have sold my shares, and actually probably could have made a winner if I just was a little bit more patient, but I wasn't. And so learn from my mistakes. So let's go with Resi first. Let's see here. When's Monday? 5:11, and I jumped in at like right at the market open. Let's go to Monday, and you can see here, Monday. Yep, this is Monday. So this is my entry, 9:33, and if I just waited literally a few minutes, I could have bought it at my stop loss, right? So I hit my stop loss, and honestly, I was just being stubborn, and I wanted to see how this played out over a few days. So even though it hit my stop loss, I just held. I wasn't worried about losing all the money I invested, which was, I don't even know, like $30, $40. Because I was testing out a new strategy for you guys, and so I just held through the stop loss anyways. But I bought in at 727 at 9:30 on Monday, and then I sold it 2 days later for a loss at 679. And the reason I held also was a few reasons. This was the main reason. One is I wanted to test a new strategy. Number 2 is I wanted to give the market time to absorb the fundamental news, which is they were supposed to be bought by someone, but then the buyer decided to break the merger agreement. And what happens was, even though they broke the merger agreement, they still agreed to buy $55 million of their shares, give them a $20 million loan, and pay them a $25 million breakup fee. So this is a lot of money for a small company, right? If you look at the Analyze tab and look at the market cap, this is a $300 million company. So getting, basically $100 million, I thought would be very positive. And if you look at the daily, just because the market has been not doing well, it's been shooting down. I was going to talk about this a little bit later, but let's just talk about it now. Let's look at the beta. So this has a 0.78 beta. If anything has a 1 beta, that means it moves direct correlation to the market. So if the market moves $1 down, not a dollar, relative, right? So if the market moves 1% down, then that stock will move 1% down. Beta is not exact. It's just an estimate. So it's never going to be perfect. Like the stock moves 1% down, it's going to move 1% down. And you can tell right here, it didn't follow what the market did, because you can see it's, what's Monday here? Red, green, red, red, red. Versus the market was red, green, red, red, green, green. So completely different movements, but it has a 0.78 beta. So about 1% move in the SPY is about a 0.78% move in Resi. What else do I want to talk about in here? So I held till Wednesday. Let's see here. Boom, boom, boom. Wednesday, I'm like, all right, I can't hold anymore. This is just shooting down. And so I exited it at what time? 10:38 on Wednesday. 1038. So about this candle, when I'm like, okay, it's gonna keep going down, I'm just gonna get out. So that's what I did. Luckily didn't have to waste a day trade, but took a big loss there. But it wasn't it wasn't like my whole account. Where was it? Resi, not great. 2.42, right? So a little bit larger than a 2% loss, obviously, because my stop loss was actually this red line here that you can see, which is like 7.12. But it's fine. I was testing a new strategy, and I was willing to take a bigger loss than expected, than planned. VSTO, also from Zip Traders, watch lists. It's a consumer outdoors sports company. I entered on literally when market opened at 6:30, and I'll show you again. Where is it here? Monday. Yep. I opened and it immediately shot down. So if I literally just waited like 1 second, or 2 seconds, I could have like gotten at a way better price again at my stop loss. It touched my stop loss. I was testing a new strategy, so I held, and it actually did pretty well. But then if you look at Monday here, oh, and by the way, I just learned, I think I mentioned this. Oh, whatever. I'll just tell it to you guys. This dotted line here is actually dividing the graph by weeks. I did not know that until today. So learn something new every day. Anyways, so the market was coming up. This was coming up. It makes sense. And what is the VSTO beta? It's actually 0.31. So it's not super strongly correlated to the market, but it's still correlated to the market. And the reason I held, even though it hit my stop loss, is this one, the fundamental reason, or actually was a technical reason. This is fundamental and this is technical, is because Zip Trader made a really good point that this had a very strong history of correction. You can see like if it shoots up, then it comes down. When it shoots down, it usually comes back up. So I was like, okay, well, I'm just going to hold and see how it does. And if I held, actually, it did hit my target profit eventually in this day too. When did I exit that? Let's see. I held it till Wednesday. I should have gotten out. I was just testing it, but it did hit my target profit. So I could have made 6% on the trade. Didn't. I was testing a new strategy. And so I sold it for a loss. And you can see right here, $1.54. And then Apollo, another overreaction. And then also RRC. So you see these big red days, right? And so I entered this trade on Wednesday, 5/13. And these were both, I was like, okay, well, this is a investment company. You know, how correlated should it be with the market, right? Like, if I'm an investment company, you know, why do I care what the market does? If I'm a good investor, I'm still going to make money. What is the beta on Apollo? Trade. Oh, yeah, by the way, to go see a beta, I say it right here. You go to ThinkorSwim trade app products underlying. So I'll just show it to you. ThinkorSwim trade underlying, and then you have to actually, it's usually closed. You have to click this arrow to go see beta. And so Apollo, let's see. Oh, 1.6. Okay, interesting. Apparently the Apollo does have a really strong beta, but I'm surprised that that's the case. But like I said, it's just an estimate. Nothing's exact, and nothing's like exact, pretty much. So I went in on Wednesday. I entered at what time here? 12:40. Boom. 12:40. Wednesday, 12:40. Yeah. So I entered. It did well for a little bit, and then the market came down. It came down, and unfortunately, it did hit my stop loss, and so I exited the next day at 10:24. 10:24, which is around right here. So unfortunate. Testing new strategy for you guys. And also the market has been pretty tough to trade in for this week, just because everything has a pretty strong beta correlation to the market, and the market came down this week, at least the days I decided to trade. So RRC, similar story. I'm not going to show it. You guys get the point. Apache Corp. So my brother made a new scan. We were testing it, and unfortunately, this also has a super high beta, 4.8. So when the market moves up or down 1%, it moves up or down 4.8%. Insane. It did good for a little bit. I mean, I do want to show this one. APA traded it on Wednesday or Thursday, sorry. Right here. What time did we get in here? At 10:30. Around right here. As I saw like an uptrend here. So I got in. It bounced down. It actually came up, but then it ultimately led to me getting out. And I decided to use a day trade this time because it's a new strategy. I don't know how good it is, so just wanted to be safe. All right, so PDT rule, not going to mention that. Don't trade if you guys use more than 3 day trades during a 5-day period. And you can't short in Webull unless you have $2,000. Awesome. So moving on, from now on, I'm going to be giving an update every day with my full portfolio, both my long-term and my short-term, and both my 100 account as well as my main account. There will always be ups and downs with trading. That's why it's important to have very good risk management. You know, I started the Webull challenge with 100, and it is currently down like 14%, which is not great. But you know, my target is getting a 6% gain per winner, and so in like 2-3 trades, I can pretty much hopefully break even, and then start showing profits for you guys and showing that the power of good risk management. Now, the $100 trading challenge, yeah. So if you remove it, I made negative 14.26 so far, and let's just go on to what people are more interested in, which is my main account and how I did well there this week. So I started making YouTube videos, and it was about 33 to 30,000. I'm pretty much, you could see like some crazy results, but that's what happens with option trading. It's going to be very volatile. And I pretty much broken even or made a small profit, depending on if you're looking at the 30,000 or the 33,000 number from when I first started my first video. But that's still fine. Like I said, be happy to break even. That's it's all about trading, how trading works. Long-term portfolio, like I said, don't trade if you guys don't have a long-term portfolio. I have $6,000 in long-term profits. You can see because I started in March in my M1 account. I actually made money, but I don't really care what it does day to day, right? And I don't really care what this number says. What I really care about is the dividends that my long-term account pays me. And I have 50% in VOO and 50% in SPHD. Go watch my long-term video if you haven't. So half my account pays about a 0.5% dividend per month. And so $3,000 of this is paying me 0.5%. So 3,000. So how much am I getting paid per month? Yeah. Okay, 1 second. 3,000 times 0.005. I'm making $15 a month. That's pretty good. And as I make more profits from my long term, I'm going to grow my short term investments. I'm going to throw money into my long term investments. Why don't I have 32,000. Why don't I put more in my long term investments? Well, I need 25,000 minimum to meet the PDT rule or requirement. And so I need to at least keep 25,000. And obviously I don't want to just keep 25,000 because if I lose money, then I can't day trade anymore. So I'm keeping a cushion. My goal is after 50,000, I'm going to start putting half of my profits from my short term into my long term. That's my goal. But like I said, don't trade with money you can't lose, and focus on long term investments over your short term investments. A good split, in my opinion, would probably be like 1/3 short term, 2/3 long term. And the only reason it's not that way for me is because I did so well at the beginning for my short term, and I want to keep it above 25,000 for my PDT rule. So let's talk about a few lessons, 3 lessons for the new psychology and philosophy lessons. Number 1 is be very open-minded and a constant consumer of news, right? That is how I found the plays that I did this week, besides the fact that my brother told me about them. But my brother just mentioned that there was a merger rumor on 2 companies. I'm going to talk about it on the next slide. I just going to hold off. And so I just started... And I made the investment because I saw the chart and I'm like, okay, these seems kind of ridiculous. Then I started just reading a ton of news on these companies, right? And from different opinions, because I don't want to just have one opinion on the news. And I want to see like what different people think about it and the different viewpoints on it and make my own opinion. So read as much as possible and from as many different kinds of opinions as possible. This is something that I've learned to really enjoy doing. I used to not like reading, right? So, but once you start making money from the information you read, then you start to love reading. And I'm sure that's going to be the case for you as well. And this leads to intuitive investing. And this is what I'm talking about, or educated guesses. This is the 3rd swing trading strategy that I talk about in the 8 strategies to trade the stock market. This is predicting movement, right? And so this is inherently very risky, and I don't always recommend it. But sometimes when there's news that is just a wild overreaction, then I think that there's enough safety in terms of the overreaction and to make the trade on a risky trade strategy. And so intuitive investing is simply like reading news and then thinking if the market's reaction to that news makes sense. And I'm going to talk through what I thought about for these two trades and why I did not think they made sense. And so the stock market, as Warren Buffett says, is a device for transferring money from the impatient to the patient. And I strongly believe that. And then another one is learn from every trade, both the good and bad. This is a great growth mentality philosophy. And also, you want to understand why each trade worked or didn't work. And don't just assume that if it worked, it was because your investment was right, or if it didn't work, your investment thesis was wrong. Really, like, go read the news and like figure out like why didn't it work, right? For example, all my overreaction plays mostly didn't work, not because they were bad technical analysis or like opportunities, but because the SPY was falling, right? And that was a main driver for why those plays didn't work. And so there can be many reasons why your trade didn't work or did work. Remember what I talked about, like if you don't think about like the Porter's 5 forces, those can always have an influence on your trade. And I don't think about those all the time when I enter my position. And then the stock market is a crazy place. So especially with what's happening because of the coronavirus, there can be a lot of reasons why your trade did or didn't work. My mom told me to learn the good and not learn the bad. When I made one of my best friends, he was kind of a bad kid and he had a reputation for being a bad kid, but my mom still let me be friends with him. And she just said, as long as you learn the good and don't learn the bad, I trust you to be friends with him. And this has been a big part of making me who I am today. So I highly recommend this advice. And you can learn something from everybody, even if it's not or everything, even if it's what not to do, right? So be open-minded and constantly learn every day. All right, this is the 7th slide, the last slide. So let's talk about intuitive investing and how you can learn to make these kind of trades in the future that made me $4,000 this week. And so I risked $10,000 to make this $4,000 this week, and that's a 40% return. Absolute dollars, isn't really what you should be thinking about when you're a trader. The only reason I didn't talk about percentages in the title is because YouTube only limits you to 100 characters for your title, so I couldn't put my percentage return, unfortunately, in the title. And I think just generally, non-traders think about dollars amount more than they think about percentages. But you guys, since you guys are traders, I want you guys to think about percentage returns, not absolute returns. That's more important. Now, note these trades aren't easy to find, but when you do find them, they can be very profitable. I do want to show proof that I made these trades for the doubters. Like people are like, oh, this is an Excel sheet. You can have just typed whatever the heck you wanted. So I'm going to open my Robinhood here. Let me just Robinhood. Okay. Count. Oh, whoops. No. History. All right. Hopefully, let me just double check one thing. No personal information. Good. We're good. I don't need to cut that out. Okay, so let's go to refresh. And then the two main companies that I traded, three, but the main ones were AMC Entertainment and Grubhub. And then I also traded VTIQ, which is a very popular in the news stock right now, very quickly. And then I got out, and it's kind of crazy what happened to it recently. And so I'm going to talk about AMC and Grubhub first. But just to prove that I traded these things, let me just do AMC. Boom. Canceled. Here we go. You'll see like I made 7,700 and I bought it for whatever. So I sold it for 275 and I bought it for like 185, and so I made about $2,500 in profit. Grubhub. Where's Grubhub? So I sold it for about 5,000. I bought it for, I don't know, like 3,000 or something. I have the numbers on the other page, so I'll show it to you later. And then also VTech. And I sold it. So I have this one, you can see right here. I bought it for 2.9 and sold it for 3.8. Boom, quick profit. And I did that really quickly. I mean, this is insane. 9:45 and 10:46. So I made it in an hour, and it was pretty funny. And I'll talk about why I got out of that trade so quickly. And so let's talk about the first one is, okay. So I showed this. Great. I can get rid of this for the doubters. And then now let's talk about show new trading history tab. So you can see here, this may look overwhelming, but you really only need to understand one line of it. The ticker, what kind of option strategy I did, boom, boom. Number of shares or number of contracts isn't active, which no, because I sold these. which account, which entry date, what exit date, my target price, my entry price, and my stop loss for my trade plan. This is just simply like the total money I invested in this position. So I bought 7 290 contracts, which is 20.3 or $2,030 into this position, and I exited with $630 of profit. So this is the cost basis, and then this is the profit. And so great. So I want to show the new, go download the master file. I've made a bunch of new changes to it. Here you go, master file. So I made a bunch of new changes to it, like the risk management is the same. The options tab I've updated a bunch. We'll be talking about that this tomorrow, this Saturday. And then I added this trading history tab. I just put a bunch of fake data. Well, this is real data, but like my data, so that you guys can get an idea of how this works. It's not perfect. You should make changes to it to fit your history and what you want to track and stuff. But this is a great start. And this is not right. This is just a random number. And this is, just shows your total profits. But yeah, go use this, go track your trades, because you want to look back and learn from your past trades, right? That's one of the philosophy lessons I talked about today. And so make sure you track your trades and make sure you learn from every trade. This is a GIX. I talked about this in the long-term investing video. This shows all the industries that exist in the global industry classification standard system. And this is, I'll talk about this probably, I don't know when, but this is like showing just how powerful like compounding interest is. For example, the average growth of the stock market is about 7 to 8%. And then, in 40 years, like let's say you're 25 and you invested for 40 years, then, you will make whatever you invest will become 15 times the amount. So if you put in 10,000, then you'll have 150,000 in 40 years, right? Or you can think about these as weeks. And so in 1 year, if you grew at 7%, you'll have 33 times the amount you started with. So let's say you started with a $1,000 account and you made 7% per week, then you'll make 33.7 times or have 33,000 starting from 1,000. And I just wanted to make sure you guys understood the power of compounding interest, because it's such a fundamental thing to being a good trader. You don't have to grow a lot to grow a lot. As weird as that sounds. Okay, so this is trading history, the master file. Go download it in the description below. There's a link. Do I want to save? Sure. And then if you're interested, I always tweet now. I don't want to post it on YouTube because it's just way too much information, but I'm starting to tweet very often. I never used to tweet. But I tweet the news articles and videos that I think are worth reading or watching. I'm not going to tweet every video or every piece of news I watch or read, but things that I think would be beneficial for you guys to read or watch, I'm starting to tweet on my Twitter account. And I also tweet when I go live, so that's also pretty useful if you guys wanted to go watch and follow me on Twitter. You can find my Twitter on my YouTube channel. In the top right, there's a little Twitter icon. Let's see here. Let me just pull up YouTube. And then channel. Oh, shoot. Well, it's right here, basically. So, all right. So let's go into AMC. Sorry for that long-winded intro. So AMC, there was news that Amazon was going to buy them. Okay. And so this news came out. And so AMC, potential overreaction. And I bought a 1 week expiration. This is super risky. That means I had to be right by Friday. Why did I buy a 1 week expiration? So the news came out right before market opened. And so you see this giant jump in stock price. It went from $4 to $7.50 pre-market. And then when market opened, it's opened around like 6.5 or whatever. And once market opened, I was like, there's no way this makes any sense in my opinion. I bought $7 puts, and if you don't understand what a put is, go watch my last week's lesson 5, I think. But I bought $7 puts, and so why was this a risky trade? And why did I buy Friday expirations? Because the price of the options were really bad. I had to pay about like $2 per contract in order to enter this trade. And so that means my break-even price was $5. And so by Friday, and if I had to do it by next week, if I gave it one more week, it was like $4.50. And it started at $4 before the news broke, right? So I'm like, man, that is really not a lot of room for profit. if it goes to if I buy it for $2 and it goes to $4 all the way back to where it started, which is very unlikely, the news is just gonna look, it's kept it at 450, even though there's no confirmation that this rumor is even true. So the market is very irrational. So I knew there was a lot of risk there, but I was very confident in terms of my market, in terms of my thesis on this is just terrible, a fake rumor or a ridiculous rumor. And I'll talk about why that is. But I bought a $7 put for about $2. Let's see here. AMC. I actually only meant to buy 20 contracts, and so that was about 3,700 or about 10% of my account. I canceled that order to try to get a better price, and then I put in a new order. And this is one of the reasons, Robinhood, please fix your platform. I mean, also, look at the freaking history information. This is ugly way to look at history. I want to see, and this is what I want to, I want to see this when I see my history. What was my entry? What was my exit? What was my, in one line. But they show it literally in vertical order. It's just really bad. So I like Webull right now more than Robinhood. Sorry, Robinhood. I love you. I'm still going to trade with you, but you guys really got to fix a lot of things. What was I talking about? Shoot, now I lost my train of thought. Oh, I bought, and this is also crazy that it happened. I put in an order for 20, canceled it, put in another order for 20, and both got filled. I was livid. So I was like, oh my God, now I have 40 contracts of AMC puts instead of 20. And so you'll see that I exited half my position and took a loss a little bit later. Because my contracts actually went down in value, unfortunately. So I took about a $600 loss, but if you sum these, it's like 4,700 or something like that. I don't even know. It's over 4,000. But anyways, I was forced to take a loss on half my position because I didn't want that big of a position on AMC to begin with. And then I bought a few more contracts because as the price came down, I bought 8 more contracts to average my price down. So instead of $2, so my break even being at $5, I brought my break even down to brought up to 5.15. Kevin, yeah, it really was meant to be. So I brought my break even to 5.15, which I felt way more comfortable for it to go below 5.15, and so I have room to make money. And it did. It crazy enough, because this is a combination of my investment thesis probably being correct, but also that's not just the case. I'm not just some sort of genius. Like I mentioned earlier in the video, SPY came down a ton, right? And so that helped me a bunch. AMC has a beta of 1.9, 2, basically 2. And so you'll see here, it came down a ton on Tuesday and Wednesday. When did I exit this trade? Probably Wednesday. Thursday. Interesting. I exited on Thursday. So it came down a ton on Thursday too. Look, it came, obviously it was a green day, but look how far it came down. It came down all the way to 274, and I got the perfect exit on Grubhub and AMC. Very lucky. I just thought, wow, that's really low. I need to get out, because when it hit Thursday, right? Thursday, yeah. It came all the way down to 4.1, and remember, I was like, there's no way it goes back to $4. So when it did get this close, I took my profits and ran. And so you'll see, and this is not just because that investment thesis was right. It's because the SPY came down, right? So I think it was a combination of the two. And so I made how much profit there? 50%, basically 48% profit on that trade, and I made $2,500. So I lost $600, but I made $2,500. So I netted about $1,900 from that trade. Why did I not think that Amazon was gonna buy AMC? And you'll get better at thinking about businesses and business decisions from companies the more you trade and the more you think about trading. But the reason I didn't think Amazon was going to buy AMC is because why would Amazon buy AMC? They're a theater business. The coronavirus is still happening. We'd have no idea when people are going to start going and watch movies again. And they're on the verge of bankruptcy. So even if they did buy AMC, why would they pay what was this? So I took a look at what price it was at before the coronavirus. That's kind of how I thought about it. So $7. They would almost pay pre-coronavirus prices for the company? Hell no. So I just thought it was a ridiculous valuation and overreaction by the market. So I bought some puts, and it turned out very well. Second one, Grubhub. So they had a actual. This is not a rumor. So notice I underline news and news. Grubhub and Uber were having discussions about merging, and so you look at Grubhub here, and again, shout out to my brother Austin. He just finds the most amazing opportunities. I don't know how he does it, but you see Grubhub shot up here, and I was like, oh my god, that's crazy. So it shot up to like $65 because Uber was saying like they might buy Grubhub, and so I thought like that's crazy. And if you look again, like going back to pre-corona, which is like about February 14th, right here, that means they were paying literally more than they were worth prior to coronavirus for the company, like full valuation for the business, like actually like 30-40% from where it was trading before the rumor happened or the news broke that they were having conversations. I thought this was ridiculous. Now, so I entered a $65 put thinking like there's no way. I don't like what was the highest valuation prior to Corona is like $57. And so the $65 put was valued at about $6.80, which is why I entered there at $6.80. And so 65 minus $6.80 is $58. And so I was like, oh, that's a beautiful break even. And we'll talk about this more about finding good deals on options tomorrow. But this is what I'm talking about for a good deal. I was like, this is a great deal. Oh my God. $58 break even, and I make money after anything below $58. So I bought a bunch of Grubhub, as you can tell. I put $2,700 into that, and then the funny thing is, I actually made two separate Grubhub trades, and I'll talk about why. But so I bought in at kind of around here when the news broke, and then it climbed. Okay, and I was, oh man, my heartbeat was beating because I was like, ugh. My put was $65, and if it broke 65, that means it would expire worthless. And so, that's kind of scary. The crazy thing is also this first trade, and the funny thing is the bottom one is the first trade, and then the second one is a later trade. But the first trade I bought in actually, and my stock prices the option prices came down so much that I started looking for other deals. I was like, man, I still believe that this is a ridiculous overreaction by the market. And now my option has lost a bunch of money. Most options traders or most traders in this situation would freak out and oh my God, maybe I should exit. Maybe I'm wrong. I still truly believed in my fundamental thinking, and I'll talk about what my thinking was, or I did a little bit, which is they're not going to pay that ridiculous valuation for it, right? If a deal is happening, I don't think it's going to be at that valuation. And so after it came down, I actually originally bought expirations for the week of, but then when my option lost a lot of value, I started looking at other weeks' valuations, option prices, and I found that the next week, if I can get one more week of time for about the same price. And so I sold my original Grubhub contracts and then bought one more week of time, and that was about $6.80. And that was about break even, so I didn't really keep track of that trade. And so that was amazing. That was pretty cool. I got a great deal because it moved in the wrong direction. So I first entered AMC and Grubhub after hearing about the rumor. Then I started reading a bunch of news. I started reading as much news as I could about these two opportunities because I have 20% of my account in these opportunities. So I obviously want to be sure I'm right. And turns out that so I got them. And then I sold. When did I sell my first Grubhub position? Got in on Tuesday, the 12th here, and then sold it on Thursday. And then I entered the next one. No, this is wrong. I entered the next one on Thursday and exited on Thursday. Yeah. So sorry, that's a mistypo. But so I exited on Thursday. You'll see here. This is Thursday, and look at what happened. This is Thursday, right? This is the day that the SPY came down a ton, and look at what happened. So this came down. Remember, I didn't think AMC would go down to $40 or $4, which is where the prior to the merger news came valuation was. And Grubhub before the merger valuation news was about $50, So when it came all the way down to $52, I was like, oh my God, I need to get out as fast as possible because I don't think it's going to stay here. Because there is still the merger news. It still exists, so it's probably going to be between 50 to whatever ridiculous number it was, 65. So as soon as that happened, it came down a bunch. I exited my trade, made 26% on that trade. Why did I exit? Like I said, I thought the price was right. And another reason I exited was because of the news I was reading. I was reading and I read that Grubhub and Uber had a initial discussion price of like 2.15 Uber shares for every Grubhub share, which would mean that Grubhub would be valued at $68. And that is why the market came up to 65. I was like, this makes no sense. And it was because that news was leaked. But there was also news that I read that they probably were in discussions for about a year now. And, you know, I just didn't think Uber was going to pay that ridiculous valuation for Grubhub. You can read my tweets. Like I said, go follow my Twitter for news. Go follow my Twitter. I tweeted all this news during this week, so you can tell I'm not lying about all the news that I read on Grubhub and AMC and why I did these certain decisions. But I was like, oh my god, 2.15, that's a ridiculous valuation. I don't think Uber's going to accept that, but what if they accept a valuation close to that? And so I got a little freaked out and I exited this position, not only because the SPY dropped and it brought it so close to like $50, but also because I read that news. But then, why did I not think Grubhub and Uber were going to merge? One, I didn't think Uber was going to pay a ridiculous valuation, but two, there is a law, and it's called antitrust law, that you shouldn't, and there are exceptions, and Congress allows exceptions, but 25%. So you're usually not allowed to have two companies merge if after they merge, they own 25% or more of the market. And so that if Uber and Grubhub merged, they would have been like 50% of the market. But the reason that I was scared was DoorDash owns about 40% of the market. DoorDash is still actually the leader of the food delivery service currently. And so I was like, oh, that could be like a Coca-Cola, Pepsi dynamic. So maybe Congress will let that happen. And so I didn't read any news about antitrust. I didn't find any news on that. So on Thursday, I exited. Well, guess what happened after I exited? Like about a few minutes later, I started reading about antitrust issues and Congress bringing up that this would be fought against. And so I re-entered the position on Thursday at a higher price. So if I actually held from 6.8 to my ultimate exit, which was 12.4, this would have been like a 100% trade, 100% return instead of the 50% return that it was ultimately at the end of the day. And so I re-entered the position. So I sold this. I bought in at 2,700. I sold at 700. So this is 3,400. But after I read the antitrust issues that this would actually come up against, and also every state is like implementing like these rules to cut the commissions that all the food delivery apps are charging the restaurants, which are ridiculous. They're saying like, let's put a 15% cap. I can't believe, and they're complaining. The food delivery apps are complaining. So that just shows like how much they're charging these restaurants. It's actually an insane amount. And so that was also negative news. New York just passed a bill to cap it at 15%, and a lot of other states are thinking of different ways to like manage how much they're eating out of the restaurant's profits. And so I put more money than I even made on the original trade, 3,400, and I put $4,000 into the next trade, and I actually made 24% on that, which is about $1,000, or you can see $960. And I exited. Why did I exit? So I bought in on Thursday. Is this Thursday? Whatever. Anyways, the reason I exited was because the price actually obviously went up to 12.4, and I thought that was a great return. And you have to think about it from the or the profit percentage. The profit expiration. I bought a $65 put. The contract went up to 12.4. I was thinking like it's probably not going to be $55, especially with the antitrust issues that they're going to have and all these new states implementing new laws. In fact, if anything, like it could potentially go back to $50 for Grubhub because of all this negative news. And so 12.4 profit or exit price, which would mean 65 minus 12.4 is 52.6. So I was like, that means in order to actually have that kind of profit or that kind of option price at expiration, the last day, like I said, the price of the stock price at the expiration would be 52.6. And I was like, oh, that's beautiful. Like, I think that's a very reasonable price. And so if my current price of the option is already 12.4, I should just take it now and run. And so that's why I made 24% on that trade. So this was antitrust as well as and state fights against apps, food delivery apps. So these were the fundamental news, and then this was like because movie theaters are shitty businesses in my opinion right now, and so that's why that was the news for there. Now my last trade was VTIQ, and I don't know if any of you guys have been watching like the thousands of YouTube videos have been coming out on this, but this has been basically a meme stock. And not in a bad way. I mean, the news that was with this company, and I entered this at Wednesday and exited Wednesday, VTIQ. You'll see this is ridiculous. So you can see the crazy ramp up. And in its history, it was started in 2018 by I think a GM VP. And this is basically, and it's basically only stayed around $10. And why is that? Because this company is not a real company. This company is basically a blank check company. Right here, and basically it was founded by a GM vice president, and the idea was that he would go and work with someone in the electric vehicle industry and help them grow with the money that that this company holds. And you can read their 10K and see like how much money this company has in order to invest. Nikola for the win. Yeah, seriously, dude, that company is amazing. And there's if you read about like Nikola Motors. They're basically like everyone's talking about. The rumor is that, or the idea is that it could be the next Tesla, right? And they already have $10 billion of pre-orders for 14,000 electric trucks. The pre-orders, they haven't made, and they have some electric trucks already in existence. And so this isn't an idea. This is a real company. Nikola Motors is the real company. And so the Nikola Motors is a private company, and Vector Acquisition Corp was going to merge with Nikola Motors. But why did I think, and I bought puts on this too. Why did I buy puts? Because they jumped up to $1 billion valuation. And why would, in my head it was like, yes, you know, the stock market likes to price things in and all that. And this is actually why I exited the trade the same day when I made a little bit of profit. I bought puts on it. I bought $20 puts for about like $2.90. And then I exited for $3.80. And the funny thing is, when I bought it in right here, when I bought it, the stock price went up, but yet my option price went up as well. And so this is the dangerous thing about when you don't understand options, and why I say options trading is very risky. Make sure you truly understand it before you trade it. But the reason why my stock option, my put option, which should only make money when option prices go down, stock price goes down, the stock price went up, but the SPY or the general market was going down. And so the volatility of the entire market was going up. And remember, one of the pricing components for options is volatility. And so because volatility increased, my option prices increased as well. And as I saw that, I was like, I can make 30% profits in like an hour. I am taking that money and running. Right, I put $2,000 in there and I made $600 in about an hour. And I bought $20 puts, right? And so at a $4 valuation, that means the stock price would have to go to $16 for me to actually make that at expiration. And if I can make that when the stock price is currently at $35, why would I not do that, right? And so you can look like prior to the news, it was trading at about $10 really, and then all the volatility with the market, it was trading at about $15. So for me to think that the stock price would go all the way back to $15 was unlikely, or even $16. So when it was at 3.8, I got out and I took my money and ran. It actually kept on going up, obviously, because I bought it at 35 and now it's at 22. So my investment thesis was right. Like they shouldn't price the full merger already. Like they don't even know if it's actually going to happen. The VTIQ is going to have a meeting in June to decide if it really is going to happen. But why did I run away and take my 30% profits? One, 30% profits in an hour is amazing. Why wouldn't I do that? But number two was the market can be irrational, right? And the percentage that this merger is going to go through in my head was extremely high. And so the probability or the possibility that, the stock, I did this on Wednesday right here. The possibility that the stock price will continue to stay at 35 and not come down to kind of, I bought it at $2.90, so my break even was $17. Come down past $17 in 2 months. I had 2 months time on my contract. potentially not good, right? And so the probability that this merger is going to go through is pretty high. So the possibility that the stock price stays at $35 existed. And so since that possibility existed, I decided that it was better to take my profit. And also it was an amazing profit. So why not? And you can look at the option price right now. I mean, VTIQ, if you look at the July contracts here, puts, $20 puts, they're currently at $5.80. I sold it at $3.80. So I could have made a ton more money, but you don't know what the future is going to hold. I mean, hindsight's obviously 2020. And my fear was that the market would continue to stay irrational, or that, it is a very likely chance that they're going to actually go through with this merger. And so if that's the case, then the valuation could have made sense, right? And so I didn't want to be stuck holding a $20 put when the the stock price actually stays at 35. So like I said here, was worried that the market would continue to price in the merger before it actually happened. Exited the put option to be safe. The impact of increase in volatility shot my option price up, and that's why I made money, even though when I was holding the contract, the stock price was actually going up. Also, none of the options were a good deal in my opinion. Yeah, so if you look at this, the option contract prices here, look at the break-even point at all these contracts. The best break-even point, even at a $50 put, you have to pay $32 for it, so your break-even is at 17.7, is terrible. I mean, I already said, what's the likelihood of my $20 option contract going to 17? And so the option prices were terrible, so I just decided to exit that trade. All right, so that's everything. Like I said, always please paper trade until you're familiar with your brokerage platform, as well as all the strategies that I teach on this channel. Remember that, I have to say the disclaimer, read the description. Everything I said is for educational purpose only. Trade at your own risk, and, what else is there? Whatever, trade at your own risk. Nothing I say is advice or recommendation. That's what it was. Okay, so that's done. And then another thing I want to start including, if you guys are interested, is that I would be happy to review your trades, both successes and failures, that you comment below. Because I'm not gonna always trade every week, right? I don't want to overtrade, and unless there's a really good opportunity, you shouldn't be trading. And so in order to have something to talk about every week as part of the weekly recap videos for the $1 million trading goal challenge, right here, I'm happy to talk about your guys' trades. So comment below if you guys have any trades that you guys would be happy for, or allow me to cover on my weekly recaps for my $1 million trading goal challenge. All right, that's it for today's video. Let me know if you guys have any questions. I'll stay on for a couple more minutes and then hop off. Hopefully you guys understood everything I said during this video. But if not, go rewatch my lessons. You guys have to understand lesson 1 through 7, really, and 7 doesn't even exist yet until this Saturday. But 1 through 5 is enough to really start, and then 6 and 7 will give you an even better understanding of what I talk about here. Any questions? And I'll leave it on this screen in case you have any questions on this stuff. And like I said at the beginning of the video, feel free to ask questions throughout the video. All the chat is saved, so I can always just read it when I have a chance and answer your question. All right, guys, 60 more seconds and I'm hopping off. Any questions? You the GOAT. Thanks, Kevin. You the GOAT. Thank you guys for watching. Thank you guys so much for the support. I really do appreciate it. You guys have no idea. I'm just blown away by the the momentum I've had from YouTube. Yeah, I'm really excited for tomorrow's lesson as well. Tomorrow's lesson is about finding the best option deals that I talk about, kind of like how I thought about the AMC deal. I thought it was a bad deal, $7 put for $2. That means my break even is $5. That's really not good. And so even if it went back to $4, I would only make 50% on that trade, and $4 was the price before the rumor, right? So that wasn't a good deal, but the Grubhub was because my break even was 58, and that's above where I think it should be way above where I think the actual price should be. And so that was a great deal. And then VTIQ, bad deal because the break even was 17. And really the best option was 17 about. And so that's not good because, the chance of going from 35 to 17 was very low. And so that wasn't a good deal. But I'll talk more details. And also I'm going to share the analysis tool that I use when I trade options. And it's in the master file. So make sure you guys go download the master file in the description below and use those tools that I give you guys because they're awesome. Well, at least I think they're awesome. But I'm probably a little biased because I made them. All right. Looks like there's no questions. So thank you guys as always for watching. And I'll see you guys tomorrow, hopefully, when I talk about finding good options and how to find the best options to trade. All right. May volatility be ever in your favor, guys. Best of luck trading next week and hope to see you guys tomorrow.